All right, we are connected for the afternoon news update. And as always, looking forward to connecting, sharing my 2 cents on a variety of subject matter. And I'm noticing a increasing narrative surrounding QE. Now that we are officially in the phase of QT ending, that means the Fed might remain somewhat neutral, anticipating and waiting on a deliberate cut of the Fed funds rate. And then, of course, we have the incoming Fed chair next year. At the same time, we got the Trump administration promising all types of very promising futuristic events. And I think I compare them to the golden age that Trump has ran upon to this point has everything to do with a return of QE. And so I'm going to talk about that and a lot more. And so as always, for those who are plugged in, appreciate you for blessing me with your time. Feel free to let me know where you're watching from, as well as thoughts, ideas, suggestions, because I would love to get a chance to see what you guys are keeping your eyes on. And figure I would just connect and do somewhat of a later afternoon just because early morning was somewhat calm. We got a silver, gold, slight correction. But then again, we're still at all-time high territory, so it's not really a substantial correction the way that we would see them in the crypto space. But I just put together a couple articles here to highlight the narrative I want to really paint today in reference to how everybody, especially the institutions, appear to be positioning for the spigot to be cut on. And so what Trump has labeled as the golden age, if you've been following the channel for any length of time, I've referred to it as the MAGA Wealth Effect. And so I'm going to go through case by case, example by example as to why that is. And so definitely want to stick around and take a hold of this, because at this current moment, if you anticipate something happening, you might want to do, once again, just my opinion, do some things to position yourself in a way that would help you be a benefactor of the coming liquidity that's going to take place. Because ultimately, I think we're going to see the last inflating of the everything bubble. And they're going to pump so much liquidity in the markets either before something breaks or to prevent something from breaking, so that the wealth gap will grow substantially and that wealth transfer will ultimately be the final one. And so there's lots of reasons why I think that is. So we're going to get into that. But before I move forward, for those who might be new, you never know, hit that thumbs up button, the check mark wherever you're watching from, and show support for the channel. Definitely that is appreciated. And then also for those who might be new, you never know, I want to also provide some resources down below. And at any point you want to go get your gold, get your silver, feel free to go click those links down there and go ahead and get involved. But let me get into some primary subjects that I want to touch on today. And a lot of it has to do with, this is 2 days old, but I thought it was worth mentioning because it plays right into what I want to talk about. Trump says new Federal Reserve chair to be announced early next year, which will probably be Q1-ish, to prepare the markets in advance for what will be coming, because whoever's going to be put in that position officially will end up being an easy policy person, where the goal will be to keep this narrative going, keep this party going, and which means more debt creation, more can kicking, more hype and hope around future promises. Because once again, the promises that are made today, as far as the tax returns next year, the dividend checks, and all that other stuff, once we get into that time frame, then there are going to be a new set of promises that you'll be able to grab a hold of in anticipation of this facade of making America great again. But as I mentioned before, clearly people behind the scene know what's happening. And so when I saw this headline, I'm like, man, like what a coincidence that this kind of plays into what forecasters as well as banks are also considering. So here's an article here. Deutsche Bank predicts Fed QE return in Q1 of 2026. So I'm thinking like, okay, if we got a too big to fail bank anticipating what's coming, we got a Federal Reserve announcement that will be very accommodative towards this administration. That's good to say that the markets will respond as far as the asset bubbles that have been inflated will continue to expand. So equity is going to go up. The little MAGA 7 money laundering scheme they got going on amongst themselves of NVIDIA buying OpenAI and OpenAI buying NVIDIA and Microsoft buying NVIDIA, and all of them, they just buying each other, pumping each other, inflating each other up. That's going to grow. The tariff situation is going to quiet down eventually, because most people are not going to really care about that, because the affordability crisis is right now and is present. And this administration is becoming harder for them to actually get away with that narrative, because you can't keep blaming Joe Biden forever when we're almost 11 months into a new administration. And so if there was a solution to the problem of affordability, surely Donald Trump should have been able to do something about that. But unfortunately, he has not, because it is not a administrative problem directly. It is a fiat currency crisis that we're experiencing. And so let me share with you exactly what I'm referring to. This is off the cuff here. I didn't plan on, but this is in the Telegram. I put it there so you can see what I'm about to put on the screen here. So here we have poll. Trump's own voters begin blaming him for the affordability crisis. Americans continue to say affordability is out of control, and they place the responsibility on Trump, the political poll found. So just to give you a nuts and bolts of what's in here. Here is 1 in 5 Trump voters think the economy is his responsibility. And so Biden holds full responsibility. Initially, 37% said, 37% now says Trump, 6 said it would have been Harris. Mainly Biden, some Trump, 20%. Equally Biden and Trump, 14, 11%. Mainly Trump, some Biden. So some people say it's still a lingering effect from Biden. And then so Trump holds full responsibility is 18%, and some have 53% for the previous administration. And so that is out of what looks like 2,098 U.S. adults online between November 14th and November 17th. So take this survey with a grain of salt. But then again, everybody can feel the tightening of their pockets. So it's good to say this is not something that should be by surprise anybody. Okay, so I thought I would just mention that because here we got Deutsche Bank says QE is coming. So Deutsche Bank made a bold prediction. So how bold is it really when we know we have an administration that's hard pressed on keeping things relatively the same as far as how things operate, the continual upward trajectory of the wealth effect. And so the only way to do that is to create currency. And so the Federal Reserve has to step in and ease things to make it more accommodative for banks to lend and people to borrow. And so the U.S. Federal Reserve is expected to begin a new round of quantitative easing in the first quarter of 2026. The forecast comes shortly after the bank correctly predicted the Fed's decision to end QT, giving weight to their latest outlook. So the fact that they're tooting their own horn saying that we told you ahead of time the QT was going to start, and now we're telling you ahead of time the QE is going to begin. It says if this forecast holds true, it could mean a major shift in monetary policy is just over a year away. QE, often referred to as money printer, involves a central bank purchasing financial assets to inject liquidity into the economy. Historically, this has led to rising asset prices, including equities, real estate, and cryptocurrencies like Bitcoin. And so, once again, why Deutsche Bank matters, yada. But if Deutsche Bank was right about QT, we all knew QT was coming because economic conditions have been tightening over time due to a lack of consumer spending and the laying off of the average cash cow, aka the labor market, and those that spend. So things were tightened automatically. And of course, the whole tariff situation and Liberation Day didn't really liberate anybody, but you guys get my drift. So my whole point was QT ending. QE is anticipated to start. At the same time, Jerome Powell will be exiting. Whoever's going to be put in there will be accommodative to appease this administration. So therefore, what can we expect? That, I believe, will be the golden age. And so a good way of looking at that is, let me share with you on the screen here, what I started off saying before Donald Trump got elected. He ran on making America great again. The only way he can do that is to create more currency, which is what we have in the center here. And of course, the West is in position to do it through cryptocurrency, which will be a part of this boom. The primary focal point of the golden age is centered around the digital transition. So Bitcoin will touch all-time highs. And of course, gold and silver, as a result of the liquidity spigot being cut back on, will surge stronger and higher for longer because it's a global phenomenon. Nation states and governments and central banks outside of the Federal Reserve and Europe, for the most part, are racing to gold and silver. Having any asset on this board when the spigot cuts on will be very favorable in nominal terms. Now it's a matter of how things play out in the long run. And then, of course, I can get into sharing my thoughts on how all this plays into the 2026 to 2029 time frame and the things that will probably take place that will be good for some and bad for others, based upon the narratives that will shift along with the political chaos is going to ensue, the global tension is going to rise, and the fact that there'll never be a calm moment moving forward once the spigot cuts back on, because there will be a continuation of have and have-nots. And the best way to actually paint a picture of what I'm referring to happens to be right here. And this is what I call the quiet wealth transfer, which is taking place right now. So the government's going to create more debt. And this is a depiction of the industrial age coming to an end. And as a result of this, what's going to be brought in is the technocratic age, where asset prices will continue to inflate as more debt is created, as the average worker is basically drained dry of the last little bit of energy and purchasing power that they're able to produce for themselves. And then it's going to be siphoned into the big boys, which are the tycoons, the billionaires of billionaires. And then they are the ones that own the assets. They're going to experience extremely high valuations. And Elon Musk will be the first trillionaire. Bezos will be a potential trillionaire. So the billionaires will eventually become trillionaires in this MAGA wealth effect that's going to take place. And of course, everybody's being positioned right now. So as I mentioned before, World Liberty Financial, keep an eye on their balance sheet, because that is the Trump empire. And let me just bring this up here. Let me bring up here and share with you the latest. And so here on the screen, we have World Liberty Financial, and this is their apparent holdings brought to us by Arkham. As you can see here, this is what they are reported to be a part of as far as things that they are holding in their portfolio. And then it gives valuations and balances and things of that nature. And so as of right now, there's a total of $7 billion and climbing. And so that is associated with the Trump family, on top of a lot of other things. So you better believe anybody and everybody who's been paying attention, watching the big boys move, they're getting positioned. But it doesn't stop there. So let me give you a little bit more. So over the last couple of days, or last week or two, primarily in the crypto space, and that's where everything is centered upon, because Bitcoin is numero uno. And over the last month, let me share with you, over the last month, from a potential high, so literally over the last month from 106 down to 82, that $20,000 plus drop and its sideward action over the last several weeks has allowed the institutions to gain a better footing. And so literally we have more clarity, more understanding as to how the too big to fail banks and their subsidiaries and hedge funds and institutions are all jumping on board the crypto train at the end of Q4, getting ready for the golden age, which they will be a benefactor of. And what do I mean by that? So we got the JP Morgan calling out MicroStrategy as a Ponzi scheme and doing all the things in the back end, trying to short the company, dump shares of strategy, and all that stuff that people should follow, because ultimately this is what the West is developing. So whether you're a crypto person or not, it doesn't matter. This is where the funds will flow. So you might want to pay attention to it. And so beyond that, we have more information coming out. And let me just go to a couple headlines here to give you some details. So I bookmarked a couple things here. So this is over on X, but just to give you an idea of some of the developments that's taken place last week or so. Okay, so Bank of America is now, it says, so this is just a little history of events. In 2021, Bank of America, no good reason to own Bitcoin unless you see prices going up. Now, in 2025, Bank of America tells clients to put 1 to 4% of their portfolio into digital assets. So now that the Federal Reserve have given clearance for the big banks to custody and to hold and to interact with crypto, now the big banks are coming out saying, oh, sure, now you should get 1 to 4%. Come buy with us. We'll hold it for you type of narrative. It says first they ignore it, then they attack it, then they allocate to it. Oh. And then here we got Coinbase CEO Brian Armstrong. Tokenization will reinvent finance, and everything that can be tokenized will be. Coinbase is the epicenter for all the institutions when it comes to custody, as well as allocating projects and helping develop technologies and products and services. CEO coming out saying everything's going to be tokenized. Then you have just stuff like this where a lot of people are excited. It says ETH BTC broke out of a 3-month downtrend. This is ultra bullish for altcoins. So here you have the possibility of there being some type of revitalization. And then this is the most important one. Biden administration was disastrous for the digital space, but the Trump administration is being very promising for it. CFTC announces spot Bitcoin and crypto can now trade on CFTC registered exchanges. CFTC said this is to help make America the crypto capital of the world. And so not only is the golden age centered around, innovation, bringing back this, tariffs, whatever, but the idea of making America the crypto capital of the world is what will ultimately drive this golden age MAGA wealth effect boom when it comes to the spigot being cut back on. And so it is a first cause for the West and this administration to make digital assets and tokenization and everything else centered around it numero uno. But on the global scale, we got every other central bank, as well as institutions and hedge funds and family offices in the Eastern Hemisphere, centered on securing as much gold, in particular, and silver as they can. So you see the combating natures of where things are heading. But every central bank, maybe except Japan initially, may cut on a spigot at the same time. And imagine if every spigot was cut on at the same time, it will flood the world, and flood the world with instruments like this. So anything of any type of monetary property, especially things that are scarce in nature and valuable and necessary for sustaining humanity, i.e., of course, gold and silver. But you get my drift. There's going to be a wave of currency like never seen before. And that, my friends, is something worth paying attention to. Okay, but I'm not done there. But before I move forward, let me take a minute and share with you what I believe will be a opportunity for those who speculate. If you're a speculator, if you're looking for ways to get involved outside of the tangible side, because as I mentioned, the currency is going to flow everywhere, then this could be a good way to get into the digital, to get into the physical, or physical into the digital, whatever you prefer. But take a listen to this, and then we will get right back at it, my good people. Sick of watching your savings lose value? Now's the time to get your weight up. Visit the RTD Silver Team Store and either start stacking silver or add to your current silver stack. Because by getting the people's money, you're protecting tomorrow by stacking today. Click the link in the description to find out more information. Looking for ways to get affordable gold? Then it might be time to redeem your Federal Reserve notes to spendable 24-karat gold notes. It's real value you can control, and it's a great way to protect yourself against inflation. To get yourself some, go to buygoldnotes.com or click the link in the description. And last, if you're looking for alternative banking, look no further than UPMA Precious Metals. As banks aren't protecting your money, they're actually using your deposits to extend loans, which expands the monetary base and offer you pennies and interest. Get back to traditional banking by opening up a free UPMA Metals account where you actually get to save in physical gold and silver in a vault with your name on it. To find out more, go to bit.com/gold-silver-banking or click the link in the description for more information. Back to our show. But my whole point was Tether getting gold. Very concerning. It should be concerning because you got Tether, which is a mediator between the government and its crypto space. And I believe they're working hand in hand with the government. And since the U.S. government is not buying gold or cannot buy gold or approved to buy gold because we don't want gold to be a part of the narrative, perhaps they're using Tether as a way to fund their gold operations and allow the gold accumulation by Tether to be something that can be linked to the government in a worst case scenario. If there's a situation where the U.S. really needs to show that we got gold, because I don't think there's gold in the vaults, they can actually use gold that's from Tether or from any other entities, whatever, to bring some gold to the forefront if there's a showdown between the China vaults versus the Western vaults. Because once again, whoever holds the most gold calls the shots. So that being the case, time will tell, but we'll see. But I read through a little bit of the information here. Tether purchased 26 tons of gold in Q3, a larger quarterly acquisition than any other central bank. But then again, central banks added 220 tons of gold, up 28%. So as I mentioned, East is going physical, West going digital. When they cut on the spigots, it's going to flow everywhere. So it's just something there. And then here's another story that I think is worth mentioning. Bill Holter on the U.S. Watchdog show, and this is out of Zero Hedge, but they extracted some very interesting things worth considering, because outside of the spigot being cut back on, the golden age / MAGA Wealth Effect starting, whether it's preemptive or in response to whatever events that are coming, there's going to be a reshifting of the monetary pipeline in general. And it has everything to do with derivatives and all the debt that's unserviceable, whether it be government, whether it be consumer debt, whether it be personal, private, any type of debt mechanisms are about to be inflated away. And so here's just some things I thought worth mentioning, because it says here, clear that something behind the scenes is breaking. Holter warns we're headed for a derivative meltdown. So the derivative industry, from what we know, is 4 or 5 trillion. He mentions 4 or 5 quadrillion. He mentions just 2 here, and it's of a certain type. It's Bill Holter, let me give you a little bit here. It says in 48 hours, it says there are so many ways the system can break down, it's hard to keep track. But let's start with exploding silver prices that happened at the end of last week, Holter says. In 48-hour periods of time, silver was up $5 an ounce. It's pretty clear and pretty obvious that something behind the scenes is broken. We know that the lease rates have exploded. We know that borrow rates on SLV have exploded. We also know that in the last 5 to 7 years, silver has been in a deficit. It says the rumor is somebody has put up 20 billion order, which is would mean 400 million ounces. If that is the case, that order cannot be met, and this will create shark-infested waters. If somebody stands for delivery and it looks like it may be difficult for them to get to deliver, then everybody is going to take a delivery because they know that their contracts are worthless. And so the race to deliver will be the issue if and when somebody decides to step up to the plate and demand their physical. And then he goes on to say the derivatives market is a 2 quadrillion. In the future, you're going to measure your wealth by how many ounces of silver and how many ounces of gold you own. Once you get a failure to deliver, you will get a Mad Max scenario. Failure to deliver will melt down all deliveries, all derivatives. So the world runs on credit and credit runs on faith. If you break faith, then you have a real problem in financial markets and the real economy. And that there is something definitely worth considering, because Bill Holter been saying the same narrative for quite some time. But once again, you keep saying the same thing over and over again, and it be centered around true concerns. At some point, one of 2 or more will actually come to pass. And so those are just some things worth paying attention to. And what else I got here? A couple other things here that I want to touch on briefly, and then we will get back to our day. And I apologize for a little issue there. But here's a little meme that somebody put out that I thought would be interesting. And so it says, Powell walking out next to send gold to 5,000 and silver to 100 with another rate cut and inevitable QE. And so these are just some stories, man, of what's happening. But in a nutshell, QT is here. QT is coming. The golden age will be utilized. So Trump will definitely get up on the podiums and talk about 401ks at all-time highs, this or whatever. All these good things that will be happening. But ultimately, it's going to be the last big bubble before the final transfer of wealth. And then after all that fades, because people realize that this was used against them, then we get into the official reboot of the system, which comes their solutions. Digital currencies, digital ID, digital entrapment, digital that, and then we enter into a whole new world. And that same world that we'll be entering into falls right in line with what some consider a new world operation. You get my drift. But once again, taking a minute, sharing my 2 cents. Yeah, apologize for audio. As always, for those who got a little something from this, hit that thumbs up, show your support, take advantage of opportunities in the description. When the spigot's cut on, everything that has value of any substance or any use case to anybody will go up, because everyone's going to be scrambling to get out of these and to get into something else. And that's where opportunity presents itself. Invest wisely. But other than that, be blessed, be safe. Peace.